Good morning out there, folks. This is Darius Dale here to present our macro minute for Tuesday, February 15th, 2022. Starting with markets, we have stocks up this morning, commodities down, crypto up, dollar down, global bond yields up. Big movers this morning. We have the NASDAQ 100 index and the Russell 2000 both up around 2%, Bitcoin up around 5%, Ethereum 6%, and then you have silver off around 2%, WTI backing off hard, down 4% from an overbought signal that we issued the other day, and obviously on the heels of this sort of calming tensions in the Russia-Ukraine NATO dispute. On the macro front, leading survey data out of Europe are marginally confirming of our post-Omicron bounce view. The risk that this positive rock growth impulse gets incrementally priced into risk assets beyond Friday's OPEX has increased with apparent concessions being made in and around the Russia-Ukraine NATO dispute. So we got the Germany Zoo current situation index ticked up to minus 8.1 in February. That's the highest number we've seen since in a couple of months. Germany Zoo expectations index ticked up to 54.3 in February. That's the highest print we've seen since July. Elsewhere, Q4 GDP data out of Europe and Japan are showing both economies are growing comfortably above their trend into 2021 to end 2021 rather. These growth rates represent very difficult comparisons amid the removal of fiscal and monetary accommodation at the margins. So we had Eurozone real GDP growth accelerate to 4.6 year over year in Q4. That's the highest print we've seen since 2Q11. The 5-year trend through 2019 is only 0.9%. So that's Europe's organic growth rate. Japanese GDP slowed to 0.7% in Q4. And that's the lowest print we've seen since Q1, Q21. But that's significantly above Japan's organic growth rate, which is actually down 2.6%, contracting. So just taking it to the chart here. This is what we're showing in the blue bars, Europe's year-over-year real GDP growth on a quarterly basis. The red line in the chart is the 2021 GDP Bloomberg consensus forecast. The black line is the 2022 Bloomberg consensus forecast. And as you can see, two things. One, the last blue bar is comfortably above the dotted line, but so is the black line, which is, again, the 2022 real GDP growth expectations. So consensus is expecting a lot out of pretty much every economy in the world, the U.S., Japan, global economy, Eurozone, relative to the organic potential of the economy. So that, in our opinion, is pretty odd and at odds with the removal of fiscal monetary accommodation. We continue to think a growth should scare by mid-year is probably the highest probability outcome that we don't see currently priced into markets. And shifting gears here, our probable range setups, nothing overbought, oversold in the global macro risk matrix. S&P 500, that is neutral VAMs minus 4.5% of downside versus 4.5% of upside. So fair fight there. WTI minus 9% of downside versus 4% of upside. Still neutral VAMs there as well. Bloomberg dollar index still bullish VAMs minus 0.4% of downside versus 1.6% of upside. 10-year treasury yield bullish VAMs minus 23 basis points of downside versus 12 basis points of upside. Bitcoin still bearish VAMs minus 19% of downside. Still hodling the upper boundary of its probable range. Again, that typically is a leading indicator for a directionally positive volatility adjusted momentum signal phase transition. So we got our eyes on crypto there, and we'll be sure to signal that on the program. Ethereum minus 22% downside versus 1% of upside. That's still bearish VAMs as well, but similar behavioral characteristics from a price and volatility perspective as Bitcoin. And then lastly, gold minus 3.9% of downside versus 0.9% of upside. So that also backed off our signal from a couple days ago. So with that, Darius Dale presenting our macro minute for Tuesday, February 15th, 2022. Best of luck out there today.